Al,
Em.
Emmanuel,
Hey.
welcome back to another episode of That Mortgage Show. Today we're joined by a very special guest, Emmanuel of Cornerstone. Welcome to the show. Thank you so much for joining us. Emmanuel is a wealth of knowledge and experience. He is our national manager here at Cornerstone. He provides a ton of value and is really a team player. So we're excited to have him on and hear what he has to say.
Thank you.
Welcome him to the show.
Big shot, head honcho.
I'm just you know what? I call myself a glorified loan officer. So let's just put it that way. But,
Downplaying it as a glorified loan officer, but you've been a loan officer for most of your, if not all of your professional career?
most of my career, most of my life, probably. I mean, I started in 98, just as a little bit of a challenge. It was like, oh, you can't do mortgages. And then I did one and, 200,000. And I thought that was like the biggest thing I've ever done in my life. And ever since that, I don't know how to do anything else. I mean, thank God I love my job. So, it's one of those things that it was just the right thing.
Yeah. Well, you can definitely tell. I mean, you got to go about it every day with a lot of passion. We see you in the meetings. You're somebody that, you wear it well, that you enjoy your job.
Thank you.
Yeah. And you better enjoy it because mortgages has its ups and downs and can be challenging for sure.
Yeah, ain't that the truth?
I mean, you are dealing with people's livelihoods at the end of the day. It's like the people, a lot of us, we do a lot of transactions and we sometimes, sitting down and thinking about the impact and the change that you do on people. I mean, that's really important to me. And then waking up every day. I mean, I at least thank God, I wake up every day excited. I still feel, like fire in my belly and all that good stuff, so, I'm excited. I'm excited to be here.
I love that. And it's easy to say it, but we see it, in the meetings and we see it with your leadership. So it's the real deal. We will get into a little bit of the show, what we call the show. And then we will, once we get through all of our, items that I want to touch on, we'll just chop it up and chit chat with Emmanuel for a little bit, get his insight and go from there. So the first segment that we always do, Emmanuel, we call it, what's your rate? Because how many times have we gotten a phone call and somebody's shopping and the only thing they want to know is what's your rate?
Yes.
That's the first question everybody asks.
I
think it's the easiest question to answer too.
And that's a mindset. I think that's just a mindset. It's like, I need to go to the gym 20 days a week. It's just like if I give someone, let's say a 7%, they're not happy. But then if I give them a 6.99, they're happy. So it's, I mean, the rate at the end of the day.
If rates go up from 6.5 to 7, it's the end of the world. If they go down from 7.5 to 7, it's the greatest thing ever.
Correct.
It's the same 7.
Exactly. Yeah. The same 7. Uh-huh.
So how are you guys feeling? How are you guys feeling about rates the last couple of weeks? Any insight on what's going on?
Well, I actually just looked at the job report, and to be honest with you, it's my focus has always been on payment. Actually, the way that when I present something to anyone, I'm like, your payment is this, and then your rate is this. At least they hear, can I afford it or not? Right away. And that's the thing. You believe it or not, I have about 150 people right now pre-qualified, and they're all waiting for the rates to come down. And it's such a big mistake.
Such a mistake.
When I bought my first condo, the rate was about now like 7.5%. I think I paid like $50,000-$60,000 for it. Just a little thing, and I was just like really happy because I'm like, wow, I have my own thing, right? And then of course, it started going up in value, and then I was able to, get a bigger place and so on from that. And that's the thing. I think a lot of us, me included, because I look at the rates, like a credit card rate or anything, and in my head, I'm like, I'm not going to pay that, but then it's like, what are you really paying and what are you really losing at the end of the day by not becoming a homeowner?
Yeah,
right.
I mean, I've never seen anyone that has become a homeowner and then come back to me the next year and tells me, you know what, that was the worst thing I ever did.
I wish I would have waited for the rate to come down a quarter of a point. Right.
Exactly.
And that's something that Adam and I stress every week on this show is the difference between equity, or payment and rate, to your point, right? What's going to make the biggest impact on your payment? The cost of the house is going to make the biggest impact, right? While you wait for a half a point, the value goes up, or the cost of the house goes up by $50,000, right? It's going to cost you a hell of a lot more than a half a point on the rate, right? But
Exactly.
People like to talk about rate. That's something they can talk
You know,
about at
and
their
then
cookout.
the mortgage payment, to be honest with you, and I was told this actually by the person that got me into the business, which we're actually still very good friends for over 25 years. She told me the mortgage payment, people have to look at it as a forced savings. They cannot look at it as a payment. And you know what? If you really think about it, it's absolutely true.
Right.
You're really not, you're kind of paying yourself at the end of the day when you're paying your mortgage.
Yeah.
So
It's a good point.
and I agree wholeheartedly. It's something that people want to know, and it's a good it's like a topic of conversation. So I'm gonna share Associated Press here. We have article. So look, we'll share it because it's positive. I don't know how accurate this rate is, so take it with a grain of salt. Emmanuel, you and I before the show talked a little bit about how the media hypes up the drops but doesn't talk about when they go up, so it kind of puts us behind the eight ball with clients.
Yes.
But the headline here, average U.S. rate on a 30-year mortgage falls to 6.89. Again, grain of salt with that. But third straight weekly decline. So we are seeing things trend in the right direction, at least for now.
Correct.
For right now. And then we know it's not an exact science, but something that all of us in the industry look at. And again, it's something to at least root for, I guess you could say, is the 10-year Treasury bond. So it's not an exact science, but as this number here, as the yield on the bond rises and falls, typically so do mortgage rates. So we're looking here. We've been through this on the show, but back in September, rates were lower than they are today, and the 10-year was at 3.6 yield. It's shot up to a 2-year high recently at 4.7, and today we're trending down toward the mid to low fours. So let's cross our fingers that means we'll get below the 7% threshold here soon with rates.
And and that's again going back to the payment, because if we just focus on that, I mean, we'll never buy a house. I mean, I'm sorry, it's just and this is why, believe me, I have this conversation pretty much every day. Every $10,000 that you borrow, I mean, your payment difference is only like $67 or $70. It's not that much,
Right.
So when I start adding and subtracting, but to be honest with you, every day I get a call about the race, and right now it's just people are just getting inundated with information, which is what we were talking about. Back when I started the business, it was more of a personal. Actually, there was no DocuSign, so we had to print the package, take it to the customer's house, have more of a personal relationship. There was a real trust, because you are looked at as the professional. But now we're just it's so hypersensitive, because every day you're getting so much inundated information that you don't really know what to believe. I mean, and then people think, well, this one says 6.5, so that's the right one. That must be the right one. But they don't realize there is a cost in the back to get 6.5. It's not a free 6.5.
Yes. Yeah. Hey, so I don't want to get too ahead of ourselves here, but Emmanuel, in Florida, one of my biggest competitors, and I'm sure it's one of your biggest competitors, and we'll get into how you've gotten into this piece of the business. But one of my biggest competitors is the D.R. Hortons of the world, the Mattamy Homes of the world. These big time builders, production builders that are building tons of houses, and they're to me it seems like they're giving away the farm. And like you said, they offer these rates, but then sometimes if we get a loan estimate and compare it, it's not always as pretty as it seems. There's big time costs associated with those rates. So to your point, it's not all about I'm getting 6.5. Like it's not like it's not some dream where you're getting a rate that nobody else is getting and not paying for it.
Correct. And that's the thing, people have to realize at the end of the day, the mortgage business is a business, and it's a for-profit business. So the money has to come out of somewhere, whether it comes out of, raising the price to cover that, whether it comes out as, they're buying, a lot of these builders when they have their inside mortgage company. And by the way, that's the story of my day every day, because as you know, I do a lot of builder business. They buy in bulk, they can buy millions of dollars of what they call a forward commitment, where, they say, okay, if you buy, $20 million worth of loans, we'll give it to you at this rate. So that's how they're able to give them, a discounted rate. But again, that money comes out of somewhere. Builders are just smart. They know how to build it into a price, to the point of, they just have those resources, to do that. But in a regular purchase where you're going to buy a resale or anything like that, that rate that you show, by the way, I just checked and it is, pretty accurate. But let's look at that, because, you come to me right now and you're telling me I want to put 5% down. You're not going to get that rate. Okay.
Mm-hmm.
No, right.
The small print says very clear. This is somebody that has a 740 credit score that's putting 20% down.
Right.
Which is part of the misinformation. That's I personally, if I have my way, I will have that in like a big font, because I think it's fair that people should know that the rate that's being advertised in the news is not the rate for the regular person like us, that we're putting, just the minimum amount just because that's what we have.
Right.
Well, it makes it so much harder on us when somebody sees that on the news and then comes to us and we say, well, no, if you're putting 5% down and you have a 700 FICO, your rate's going to be a little bit higher. And they're like, well, I'm going to go shop around. And they always think that there's this magical mortgage company that's going to offer them a 0.5% lower and not charge a dime. Just not the way the world works.
It is not, and it's it's like when you go to the airlines, right? You go to the airlines and you get a ticket to New York. I mean, they have to stay competitive. I mean, and that's the same thing with us. I mean, there's just thousands of mortgage banks out there, and we have to stay competitive to the point of like, okay, we're not going to lose a deal to someone else. So when somebody, I hate it because it is cliche, when somebody says it looks too good to be true, I guarantee you 99, not to say 100, but 99% of the times it's too good to be true. You're playing it one way or another.
And I tell people, and it might sound a little salesy, but sometimes I'll say like, look, if we were so far out of the market, if I was a 3/8 or a 0.5 point off of the market, we wouldn't be in business.
Absolutely not.
It's just not sustainable. So, and then back to like the waiting, and then we'll wrap up. What's your rate? So back to the waiting. Like, what are you waiting for? You're waiting for a rate to go from 7 to 6.75 to save $25.
Yep.
If $25 is the difference between you being able to afford it and not, then it's not your price range, and that needs to be discussed and recalculated.
I have so we can, I have a little story. So a personal story. So my brother, he's been trying to buy a house for the past 7-8 years or something like that. And I remember, making appointments with him. He goes, no, but this house is too expensive, Now, like maybe 2 weeks ago, he called me and he's like, bro, this was the worst mistake that I've ever done. So please don't be my brother. Okay.
Yeah. I mean,
because think about it. Think about 8 years ago, prices, all of it.
Well, not to mention how many people are waiting in the wings for, rates to come down 1/4 point. So when right now you could buy that house that you absolutely love, and there's not a lot of competition. And as soon as that rate comes down, then you might not get that house. You know what I mean?
And
so then you're in a battle.
Supply and demand too. People don't realize from the time the market crashed, 2008 to now, the population in the U.S. has increased about 30 million people. That's really a country. I mean, Spain has, I think it's like 35 or 40 million people. That's we have literally another country right now inside the United States. So it's all about supply and demand. And, especially places like Florida right now that are really hot. I mean, there's a reason why, people are just like flocking here. It's the affordability. It's, of course, the weather. I personally hate the cold, so I could never live anywhere.
All right. The next order of business in the show is there were some jobs reports that came out today. I'm going to be super quick and concise. Al always busts my chops. He doesn't think it's fun to talk about, these reports.
It's probably the least fun thing to talk about, to get down in the weed, guy. Yeah.
We got to talk about it. So there's two reports that I want to that came out today that I want to mention. So there's the new job ads report, and then there's the initial jobless claims report. Initial jobless claims being those folks filing for unemployment the first time. So here we have initial jobs. We got a nice little graph that shows new jobs. So the new job ads is down. The pace of hiring slowed slightly in January, signaling more subdued employment growth, even as joblessness remained low. So joblessness remained low. The unemployment rate is still rated 4. It didn't jump up or anything. A total of 143,000 jobs were added that fell short compared to forecasts.
Right.
So less jobs added. And the reason that I bring this up and we touch on it is the Federal Reserve makes policy that affects our industry. They make policy that affect the rate. And one of the things they look at is the labor market. A cooling labor market or I should say a hot labor market, has been the scapegoat as to why they've kind of kept rates elevated.
Right.
So we'll see what happens. Nobody has a crystal ball. And then the initial jobless claims report showed that 11,000 more people filed for unemployment this week than last. So that's trending up. So you've got less jobs added, more people claiming unemployment. You know, I don't know how much 11,000 is in a country of 300 million, but you know, it's news to report.
Yeah.
Well, I'm curious. I mean, go ahead, Emmanuel.
Sorry, I remember when I heard that the first time, and people probably hear that like, wait a minute, more jobs. I mean, doesn't that mean that the economy is doing better and there should be like lower rates? I mean, you would think that it would be like the other way around, right?
Right. Yes,
right.
Totally.
Any sense to like a person, like a regular person that's just reading that and they're like, but then the other part is like, then why? If the job market is strong, then what? That's the other reasoning behind it. Then everything is fine. So why should we lower rate and motivate the economy more to just create inflation? I mean, that's really at the end of the day what the point is. And then right now, look, of course, I'm also hiring. I'm hiring people every day and interviewing every day. But I think right now, just because of the way that things are moving, I mean, it doesn't really matter where you are, right, left, center, whatever. I think people are just like waiting around. When you're a business owner and you're thinking about adding another payroll, it's just adding another expense. So, it does make sense, especially this time of the year. Holidays went away, things are a little cooler, so people are, waiting. I mean, new bosses are waiting just to post jobs. So I think it just makes sense right now what's going on.
Yeah. That's a great insight and something that I definitely didn't think about. But there's also, we got a big new regime coming in and a lot of things are changing. And there's probably a lot of employers that are kind of waiting to see how things shake out before they make their next move. So last order of business that I wanted to share before we just get into just more of a podcast, just chit-chatting with Emmanuel. So to the political side of things, we know that Donald Trump and his campaign, they're all about deregulation and free commerce and whatnot. One of those things that has been talked about is that directly relates to our industry is Fannie Mae and Freddie Mac being privatized.
That's right.
There is speculation that that's going to be an order of business for this administration. Mm-hmm. So I don't really know what that would look like if they were deprivatized. I would imagine, or privatized, I would imagine that it would mean a little more leniency with lending guidelines, but I don't really know. Emmanuel, you were probably aware and in the business the last time this was brought up when President Trump was in office and it didn't end up happening. So do you have any insight on that?
Well, I do a little bit. So, I've remember ever since I can remember, I've heard this story played out over and over again, how Fannie and Freddie the last time that there was like a big serious talk about it, I think it was when the market, corrected. I hate the word crash, but when the market corrected in 2008, right? They were going to privatize it, blah, blah, blah. Then nobody talked about it forever, years and years. And the CFPB came along and all that stuff. Obviously, this administration is more into the regulation, right? They want less regulation across the board. So it does make sense that this is something that they're pushing, to do. I remember, back in the day, Fannie Mae and Freddie, they had it was called a fast and easy or quick doc, for Freddie, where, if you had certain criteria of credit score, you will get like no income verification basically on your loans, And
do you remember the DU Refi Plus? Do you remember that one?
It
was like, is there Streamline? It was good.
Right, exactly. And you know what? Those programs, they were, I think, at that time we went a little, because this country is about extremes, right? We just could never have something like, it's like either all of it or nothing, right? But I think we went, at that time, we went all the way to an extreme of like way too little docs being, reviewed. And now we're like into the other extreme of like, there's so many docs, that we have to review for a loan. So, only time will tell. Maybe this would just bring it to like the level that we want. Where it's a better middle ground. But we'll see. But this is not the first time that this topic
it's been brought up and didn't happen. So, all right, cool. Well, we'll get a little bit more into just just chatting and chopping it up with Emmanuel because, there's a lot to talk about. So as being the national manager, what does that look like for you? And what has Cornerstone, being a part of that leadership here at Cornerstone, been like for you?
Well, I when I started Cornerstone, I just started as a regular branch manager, and then it just the regional position came up, and then now the national position. To me, the most important thing, and I think this goes across the board with all senior management at Cornerstone, is just being there. I mean, that's really at the end of the day what I think people want. When they have a question, usually if a manager calls me and they have a question, it's because they 99% of the time has somebody waiting for an answer. Okay.
Right.
So that's the number one thing for me. It's just number one, being there and trying to, sometimes I sit down and I'm thinking like, how did I know so many useless pieces of information? But it's useless because I already know it. But to someone, it could be the change of like getting a new builder, getting a new account, for employees, how do they coach their employees? I mean, all of that stuff, that's really what I'm here for. And also helping them expand, like I don't know if you want to talk about the accountability club or you want to talk about other stuff.
Absolutely.
Yeah, we're
absolutely
definitely going to talk about that. I'm excited to talk about that.
Oh, good. Yeah. So, there's just using my, I would say, what has worked for me in the past and what has not worked for me in the past, to be able to pass that knowledge along. That's something else that I wake up every day excited, because my job, yes, I do love doing loans, but seeing other people grow, to me, that does have a great level of satisfaction. And that's what I do when I bring in things like the accountability club, for example, where we meet, once a week. And all we do is we bang the phones and we call new realtors and new builders, just to get our name out there and to increase our business. And, the goal at the end of the day is like, I do feel like we have a message to deliver out there, especially here at this company. You, Adam, you've been at this company as long as I have. And you know that we're very different to, just the regular, run of the mill lender that's out there,
I would say so. And every day, just yesterday, we learned about, we had a training on Acrolis, which is an AI that an AI that reads tax returns, pay stubs. Really, at the end of the day, income calculations are like Excel spreadsheets. It's plug and play if you know what you're looking at. And so that's the type of thing that is really great here at Cornerstone. Back to the accountability group, like we're in our industry where it is sales, and the ceiling is limitless for anyone, even if you're a loan officer or a branch manager or whatever. But it's hard to direct that energy as a solo person, as a salesperson who may be working from home or in an office alone. So the accountability club and accountability group is so important. Were you part of those things as you came up? And how important is that to like sales?
So, just to put it in perspective, last year I was able to accomplish 98% of all my goals: income goal, personal goals, owning properties, everything. I was able to do that. And the only reason that I was able to do that, and I do believe at 100%, is number one, doing the planning at the beginning of the year. But the most important thing is having somebody to keep me accountable. I do have a coach. That coach keeps me accountable. We meet every 2 weeks, and believe me, I better have my goals, my homework, done, so that we could get to where I need to go. And if I don't, then what do we need to do to get to the next level, to get to the next step? And that's what the accountability club does for everybody that joins. It's not only keeping us accountable, but it's also sharing our wins and sharing our successes, our best practices. What works for me may not work for somebody else. Like, for example, talking about goals, Sean says, I only like to look at my goals once a year, and that works for him. Some people need to look at their goals a little more often than that, because like for me, I go through this amnesia, then I forget, oh, that's right, I have that goal. So I do need to look at it a little more often, but it depends on what works for you, right? Yeah. What works for somebody that tells me success also is a different goal for everybody.
Right, right.
Someone can tell me, you know what? I just want to make $50,000 a year. I'm a great mom. I like to spend time with my kids, and that to that person is success, and that's well respected. somebody wants to make $1 million a year, it's a totally different type of coaching.
And that's something that I really respect about the culture here. And it's something that Sean brought up at our yearly kickoff, where he was going over the top producers, and we've got some heavy hitters here, Emmanuel being one of them. But he was going over it, and he made a point to say that it isn't, we're celebrating these people, but success means something different to everybody, and we respect and appreciate everybody. We just want people to be the best version of themselves. And it can sound a certain kind of way to some people, but that is like truly the message that is top down.
Yeah.
Here, would you agree?
100%. And you know what? I believe it or not, one of the things that I do, and that you will get it very soon because we're starting the next quarter, is I send a questionnaire to all of the loan officers, and they have to answer about 10 questions and then do a one-on-one with me. And the reason that I started doing that is because of exactly that. I met with a loan officer of mine, and she told me, look, I want to be a good mom, going back to that, or this is, my husband does really well, this is what I want to do, you know? And that taught me a lesson, because to me, there was a point that I thought success means if you don't make $200,000-$300,000 a year, at least you're not successful. But that is absolute, I learned that lesson just by coaching people and just learning on what is it. So, you know, to me, getting personal with people these days is more important than anything else. You know,
Yeah.
you have 100 social media posts out there, but if you don't really learn on, you know, and that we can talk about, you know, a little bit of how I get the builders. If you don't really learn, like, through our conversation and listen to exactly what is that is important to that person, it's just that to me is like the most important thing right now.
Yeah.
Yeah.
And
actually, that's a great opportunity to segue into that, because that's one of the questions we wanted to ask you. You've had a tremendous amount of success with builders. So, you know, not to throw the whole playbook, you know, you don't have to give us all the tips and secrets and everything, but
it's the golden goose.
Capturing a golden goose.
You know, it's fine. I mean, I like to share as much as I can. Unfortunately, I think there was a motivational speaker that said that, you know, I'll give you all my tricks, but, you know, most people are just unfortunately not going to do it.
Yeah.
You do it, but, you know, it's the consistency. And, you know, there's also graphics on Instagram that come out and say, you know, this is what motivation is, and this is what consistency is. And consistency will win all the time, every single day. You know, it's just little bit that will get you there. So going with the builders, you know, it's not easy to get a builder account, and I think staying in there is actually harder than just getting the account. You know, you have to deal, you know, with a lot of rejection, and you have to take it with a grain of salt, because otherwise you will never get there. And this is why when you go into a builder, they only have a list of like maybe 10 preferred lenders, you know, besides their mortgage company. And there's a reason for that. They get coached every day, they get poached every day, but believe me, they're only going to pick the 0.0001%, okay? One of the things that they want to see from you, and I give this advice to all of the loan officers that are hearing, is that you don't give up. Okay, because that's what they want to see when you treat their customer. They don't want you to just say, you know what, this person doesn't qualify and that's it. Next, you have to wait until next year. No, they want to hear, okay, this is how we can make this person, this is how this person can qualify. This is the plan that we're going to put this person in. This is, if they don't have good credit, this is how we're going to get. They need to know specifics on what is it that you're going to do for the customer, but not just give it up. You know, so that's the one thing that I recommend to the people. Go to visit a project, go meet the in-houses. Don't just go there one time and think you're gonna get loans. It took, you know how long it took me to get into Lennar? A whole year. A year of me.
Can you tell us? Yeah, can you tell us a little bit about that year?
I'd love to hear a little bit of that story.
Oh boy, oh my God.
How many pep talks did you have to get throughout the year?
How many?
Yeah.
Lots.
Yeah.
Like a lot. Like, you know, the first time I went, you know, I went to the project, I visited the person. Then I had a realtor of mine that went over with a customer, because that's another thing. You have to try to refer them business, you know, try to get in there, get a realtor of yours to go sell something on that project, or to go, you know, to make sure that they were. The first time, nope, you're not going to get the benefits. No, you're not going to get the benefits. And it was like doing the really, really hard deals, you know, that got me in there, because I did not give up. But one of the things that I did, I remember there was a lady that she's really into and this is the true story, okay, on how I got into this builder. I called her up and I said, listen, how can I become your preferred lender? Okay, just I just need to know a path. I need to know a way. But these are the questions that will make them interested because they're like, oh, wait a minute, he really, really wants it. You have to show you really, really want. Point of the story is she's a dog lover. I have 3 dogs. I mean, we're just like talking about dogs, and my dog was sick at that point, and blah blah blah. The conversation went into like that point that I knew that was her, like the point,
Yeah.
race cars. There was another person that we got into race cars, and that was like the point. But just find something personal that you will really, really relate with that person. So you know what I did? They sell this dog cam that throws treats. Okay, so it cost me $100. I sent her the dog cam. She could not get over how special that was, and that's how I got into that builder.
That's crazy.
Oh my God,
that's crazy.
That's amazing. Just found common ground. Find some common ground.
And a little bit follow-up gift, like, and I put in the car, I hope you enjoy this as much as I do. Not get me a meeting with the developer, nothing like that. It was just a very genuinely thankful gift because I found that interest that she liked.
That's awesome. And it's just amazing how oftentimes in life we overcomplicate things.
Oh yeah.
And we act like there's some big grandiose or there's these people out there that are doing things that we could never do, which it's not the case. It comes down to consistency and being thoughtful. What I'm taking away here is consistency and being thoughtful.
Consistency, be thoughtful, and listen, there is one question that you can ask anyone. And the thing is that now things are going so fast. We have so much automation and we have so much things thrown at each other that, to be honest with you, when I get home, my partner, the most important question that he can ask me is, how was your day? I swear to God. When it just completely disarms me. So you know what? I do that with all the operations people here. This is why I have such a great relationship. We're talking about something and I just say, hey, so how are you?
Yeah.
That's
and
it.
Actually mean it when you say it, not just like, hey, how you doing? And I'm good. How are you? Like, actually, like, how are you doing?
How are you? How was this? Or if they talk to you about something else, and always give them a praise for what they do, because I think everybody these days, no matter what you're doing, you're really working your behind off to try to, provide for your family. I mean, we're all in the same boat right now. So stopping and just actually pausing and asking somebody truly and caring how they're doing, no matter who it is, that people don't realize what big of a difference that makes.
Yeah. It takes it out of like, I want something from you,
right,
to, we're both humans.
So genuinely caring about somebody. That's, it's the little personal touches, things like, that's why people appreciate like a handwritten note, right? Like it means something, right? Those things go a long way. So yeah, right. That's it.
Nice.
That's something that I've tried to incorporate, for myself. I love that. I mean, when you get a handwritten note, it doesn't have to say much. Just, hey, thanks for whatever. And it's like, wow, just the fact that they thought to sit down and do that and mail it out.
Absolutely.
That means a lot, you know?
So another thing I want to bring up specifically is, I think it was in like the summer, it was like maybe like May or June, when you had the builder in Orlando. You had the big builder networking event.
You went. Yes.
Yeah, I had longer hair then. My hair was like down to here.
It
was funny.
It was all slicked back. He was really trying to fit into the Florida vibe.
I didn't recognize you with the long hair, but it was.
So a funny thing I will mention is, when it started, Emmanuel got up in front of, I don't know how many people were there, a couple hundred. It was a really good turnout. It was a really good event. Some builders there and some vendors. It was a really good event. But Emmanuel got up in the beginning and he said, do you want to do this? Do you want to do this event in English or Spanish? And everybody in the crowd said Spanish, and I don't speak Spanish. So
but I did learn a lesson from that. You see, everything you do, you have to learn, like, okay, what do I do next time for it to be better? But go ahead, I'll let you.
So it was funny, but I sat there and I enjoyed it, and one thing that I did pick up was you introduced your team. Like your support staff, your admin team.
Absolutely.
You brought them on stage with you, your processor, your staff, and you brought them on stage. And it seems to me that you treat them like family. It's family-oriented team. We're talking about your specific team. How important is that to you as a person? How important is it to you to develop that? And then when you're out there in the field trying to gain builders and real estate agents business, How important is that support staff to winning that business?
I love that because you talked about this one time, bringing your team to win over a real estate team or what have you, and I think this is fantastic. Yeah.
Well, let's just say I learned that very in a very young, young Emmanuel in his 20s, when I used to work at Wells Fargo and I had a huge branch. Every time that I used to go see a builder, I used to always take my operations manager, my processor, just people that actually support me, because the thing is, you can't do it alone, and people know you can do it alone. And I actually think it doesn't look, it looks bad when you're like, I am by myself, on top of the fact that you're validating that these people that are in the back, okay, supporting you, are important too. They're just as important as I am. I know without my processor, I'll be probably, God knows where I'll be, and with my assistants and everybody.
I'm sure that
I can imagine life without them. I mean, seriously, to that point. And that's the thing. They're just as important as you are. So bringing them on, not only it gives them a validation, but it also tells the other people we're a powerhouse. Okay. And we're a united front. So it doesn't matter who you call on my team, they're going to go out of their way to help you. They're going to be there. They're going to, if they don't know the answer, they're going to look for an answer for you. So yes, absolutely 100%. And to be honest with you, that makes me really, really proud to be able to do that, because I tell my loan officers and I tell my people, I would do along with every single one of you. There's not one person in my team that I would not do my personal loan with, and that's something that they have to know, and they have to believe in themselves. And that's something that I always try to push. But to come to that, yes, it is extremely important to me to have a family. Like the other day we had, we couldn't have a Christmas thing because one of my processors had an operation, whatever. So we actually got together in Orlando the other day just to meet everybody halfway, and we had a huge dinner. I called Sean, which is another thing I love about here, just our culture. He got on FaceTime and say hi to everybody. So, to them, that's so like important. It's just like the little meaningful things of just calling the president of the company and putting them on FaceTime and just saying hi to everybody. Like everybody was just thrilled. But yes, with my team, I have to have a sense of family. I cannot work at a team where everybody's a robot and everybody's just like, yes, it is a business. Yes, we're all here to make money, but there has to be another sense of family and caring, for it to work. I think for it to work long term.
Right. Especially in a stressful business, there's going to be, there's no secret. You could be the greatest loan officer in the world. You could work for the greatest mortgage company in the world. Problems are going to happen. There's going to be fires to put out. There's going to be stress. And if you don't work well with the people and you don't have that, like, each other's back, it's just going to add, the stress, and it's going to make us less capable to solve problems.
Yeah.
So,
I'm sure we've all been in an office where you have this top producer that just requires all the attention, and they're the loudest person. They don't care about you, don't care about anybody else but themselves.
Correct.
But I think that all comes down to hiring, right? Hiring the right people that fit in with the rest of your team. You could be the biggest producer in the world, but if you're an asshole to your processor, then it's really not the person you want around, right? So drive away good people.
In my team, and the loan officers, just everybody together. I mean, there's not one person here that will tell you this is not my job. I mean, actually, if I hear somebody saying that, they're not going to be part of my team. Let's just it just doesn't really. It's just not, because I'm looking, and this is one of the reasons. I've been here 5 years at Cornerstone, and I haven't lost one loan officer. There's somebody that went to another branch because they live closer or whatever. But to be honest with you, my team has remained intact, and I'm very proud of that. And that's because, like I said, if you call right now any one of my loan officers right now and they don't know, they would just not leave anybody hanging. It's just, we just don't function like that. And that's the culture that I keep, throughout my team.
Yeah, I love that. And that's a personality trait that you can't fake. And I do think that is genuinely something that you share, that Sean, you brought up Sean, that Sean shares, and it goes to, I'll call Joe Omahan, and usually when I'm calling him, it's because I have a question about a guideline or something, and he makes it about, oh, how your boys doing? How are your sons? What's going on?
Right.
How's it going? Oh man, I'm so happy you called. And it's genuine. So that's like definitely a big part of, and he's busy. I know he's busy.
Yeah.
He
We're all
doesn't.
busy.
Yeah, everyone's busy, and so that's definitely like what's going on here, and it's real. It's good stuff. It's really good stuff.
Yeah. It's a great company to work for, and a lot of great people to work with. You know what
and
I mean?
a lot of great people to work for. Yeah, I mean, we do. I think it's just an underlining thing that we have like a 0A whole policy here. Like everybody that works here is pretty much. I've seen. Honestly, at one time I bought in a branch that closed about $150 million a year. And it took 2 interviews, and Sean and I looked at each other and we're like, this is not a good match for our team. I mean, it's just going to bring the entire operations down. So we have turned down people. And actually, I have another example too of somebody that we just turned down because it was just like, wow, this is just not the right personality for that team. So we are very selective with that. But the thing is that the people that get to come in, like you guys know, it is definitely a family. Very much.
It's great. Al, do you have anything before we let Emmanuel get back to his day?
I can't believe he gave us this much time. The national manager carving out this much time for our show. I can't thank you enough, Emmanuel. And your insights have been just fantastic too. A lot.
And I'm here for you guys. I mean, that's the point at the end of the day. So thank you so much for inviting me. I appreciate it.
Yeah, we'll put out some content. We'll collaborate and get our names out there. And as far as like the accountability thing goes, Al and I are accountability partners. Well, I'm Al's accountability partner. Sometimes in like the middle of the night, he'll call me sweating with a box of donuts, and he's like, "What do I do? What do I do?"
Yeah. You're so full of it, man. You're terrible.
You guys both living up there, right? Like by Jensen Beach, like Port St. Lucie.
My office is in Stewart, which is like I could throw a rock to Jensen Beach. Al is in Baltimore.
Yeah.
Oh, okay.
Yeah, I'm still in Maryland. So all that cold weather that you hate, that you talk about, I'm living that right now.
I know. We were talking about that earlier. That my partner is from Maryland, from Baltimore. So
and I was hoping you would give some of your Baltimorean accent to us.
Oh boy.
Oh yeah, do you have a Baltimorean accent that you do?
No, Al, you.
Oh, the O's, yeah.
The O's.
Come on, hon.
There you go.
Yeah.
Here, Al, he when he's talking to somebody from Baltimore, it's not a mortgage loan; it's a loan.
Yeah. You gotta find that common ground. I have to use my Baltimorean accent a little bit more. You know what I mean?
And that's something else that's important. It's like don't be pleased. It's like I think everybody right now is looking for originality.
Yeah.
And I want like right now we're just doing one take on this podcast, and this is awesome. And that's what people are looking for. That's what I'm looking for. I mean,
authenticity. That's it.
But it's a robot. Now with AI, forget it. Everything. Is
right. Yeah.
So,
no. People want the genuine article. They don't want some polished up edition. People just, want to realize that you're just like they are, right?
Exactly.
So. Yeah, I can't thank you enough, Emmanuel. You've been just excellent.